PayPal stock. Is PayPal stock headed to $30 a share? Another 50% downside from here. That's what we're going to discuss in today's video, folks. PayPal stock got hit again today, another 6% plus. It's been just a disastrous year for PayPal. It's been a disastrous 2 years for PayPal stock now at this point in time, right? People are seeing the move down. They're like, is this just going to keep going down and keep going down? Are we going to be at $30 eventually here, okay? And so I want to share some perspective, kind of give my opinion in regards to PayPal. PayPal focused video here today. I appreciate y'all joining me and being subscribed as always. If we look at my 6 biggest positions in the public account, there's one stock that is causing problems, okay, and its name is PayPal. Everything else is going just great except for PayPal. Now, PayPal is my newest position in the portfolio, so do keep that in mind. Like, sometimes it takes a while for these babies to get rolling, but nonetheless, yeah, it's a bunch of shining stars and PayPal. And so, first place I want to start with this, right, is I call this stock the best risk reward in the stock market in my personal opinion right now, right? And when I say the best risk reward, I'm really thinking about the next 36 months with the stock, and I'm thinking about the chances I 2x or more of my money, and I'm thinking about the chances I lose 50% plus of my money, right? And if we're talking about the stock goes to $30 a share, that'd be a 50% downside from here where we're at right now, right? Which would be considerable downside. Now, if you know my opinion in regards to PayPal, I call this the best risk reward since what stock? It's the best risk reward I've seen in the stock market in terms of like very low probability of losing 50% plus and a very high probability of at least 2x in your money since this stock, Meta, right? Meta last year was a stock that got absolutely obliterated, got sold off way harder than, in my opinion, it should have. I took advantage. I bought shares like crazy, and it's been up and up pretty much ever since, and it's been a grand old fun time, right? And so in regards to Meta, like this was a stock that just got pounded. I mean, for a long time. This stock topped in like August of 21. And ever since that time, it was down and down and down. It seemed like Meta was never going to bottom. And I remember buying Meta stock, and there was a lot of people saying, this stock's going to, $50 a share, $40 a share. It was all, it's going bankrupt. It's going to zero. Like everybody just throws out the most ridiculous stuff when, the stock's going down. Same thing when a stock's going parabolic up, but like everybody just starts throwing out any price target, right? And so first off here, it's like the Usher song. You remind me of a stock that I was once buying, okay? And that's Meta. And so what reminds me so much of PayPal that I see in Meta, and then we'll talk about is a stock headed to 30, okay? So the first thing is, if we think about Meta and we think about PayPal, I was convinced both companies are growth companies, right? Not like insane blow the top off growth companies like 30, 40% type growth companies, but both companies are growth companies, right? And in regards to PayPal, there's no doubt like PayPal's revenue should be up several $billion this year. It should be up several $1 billion again next year. We should see nice earnings per share growth for the stock, right? So this is a growth company in terms of top line and bottom line, right? If we look at its latest quarter, the revenues were up about 7%-ish year over year basis, right? They beat revenues by $14 million versus what Wall Street was expecting. Their GAAP EPS came in with a 10-cent beat. That's very nice. So in terms of PayPal's latest quarterly numbers, it shows that, yes, this is still a growth company, right? Second thing going on here that reminds me very similar of Meta is Meta got down to ridiculous forward P's that I was like, really? Like Meta's trading down here right now? And that's exactly what we're seeing with PayPal stock now at this point in time. When you go to a P this low and you're a growing company, that's the big thing. When you're a growing company, it provides a lot of protection for your stock price from another big downward move. If PayPal was trading at a forward P of 30 today, or let's say a forward P of 40, it's a very different dynamic. You're setting yourself up for a lot more risk because you can go down to these sorts of kind of like joke forward Ps in my opinion, right? This is what we saw with Meta last year. Meta went down to like it was like a 10 PE or so on Meta, right? A 10 forward P, something like that, 10, 11 at the lows. And it's very similar to what we see going on with PayPal right now, which is just, in my opinion, ridiculous considering the growth that PayPal has and considering the industry this company is in. Like, that's insane, okay? So that's the second reason this reminds me a lot of Meta is just such a stripped down low valuation. The third reason is the balance sheet, okay? Now, Meta has arguably a top 5 balance sheet in the entire world. PayPal's not that good, but it's a dang good balance sheet at PayPal. Really, really impressive balance sheet. Current ratio on this one's about 1.3, which is basically current assets versus current liabilities. Anything above 1.2 is good. If you go 1.5, that's, above 1.5, that's really, truly great. But very good balance sheet in regards to PayPal. So it reminds me, there's no like, oh man, if things got hard, like could PayPal make it? Just like there was none of that situation with Meta either. Those are companies that doesn't matter the economic turmoil, recessions, no recessions, anything like that. These companies make it through, they make it, and they come out actually stronger than they went in, okay? Fourth reason is growth levers all over the place for PayPal, right? I mean, absolute growth levers everywhere when it comes to PayPal. This is one of those stocks that I look at and I'm just like, oh my gosh, with 400 million plus users, with all the innovation they're working on right now, there's no doubt in my mind that this company doesn't have, just growth everywhere in terms of what they can do on the revenue side item, what they can do profitability. The one thing that's a little different with PayPal is I don't think they could pull nearly as much cost out of the business as, let's say, Meta did. Meta was a pretty exceptional stock in terms of just like they had hired way too many employees and they could cut some of those employees. PayPal doesn't have it to quite that extent, but they can bring out cost in this business. And if the new CEO wants to take some cost out, he can take some cost out. I'm just looking and there's so many ways. When you own PayPal, Venmo, and Braintree, and you got 400 million plus people that use, these different platforms, like I'm telling you, there's a lot of growth levers to pull for this company for all, 5-10 years to go in the future, right? So now that we talked about kind of why this stock reminds me so much of Meta on the risk reward profile, let's talk about $30, right? Which was about 50% downside from here and how realistic that is, okay? So I will say this, everything's a possibility in the stock market. Everything. There's no such thing as not a possibility in the stock market. And that's something you have to understand as an investor. Now, the question is, how realistic is something to actually happening, right? How realistic is it that a certain situation could happen? I live in Vegas. This is a town of odds, and we put odds on everything, right? And this team is favored over this team and all those sorts of things. So I would say the chances PayPal, and I'll go through my reasoning in just a moment, the chances PayPal goes to $30, I would call it less than a 10% probability, probably closer to a 5% probability, which is not very probable. There's a 95% chance, in my opinion, this stock doesn't go to $30 a share. But it is a possibility, okay? So very, very low probability in regards to this one. And why do I say that, okay? There's a few reasons. So first is, in regards to this, right? If we look at the current, P's of this stock, right? If you were to talk about this stock going to $30, then you're talking about forward P's of 5 or 6. It doesn't make any sense. Let's say you had some sort of major recession that happens, something like that, okay? Well, then you could say, well, maybe profitability would get hurt. I can make an argument that PayPal will grow even in a recessionary environment, unless it's some end of the world type recession, okay? But let's say their profits did go down if there's a recession happening, okay? Well, if you were to talk about a recessionary environment, let's say their profitability got cut in half, which would be like end of the world type recession. So then the stock's trading at a forward P of 22 in a end of the world type recession. That's really low. If you're in an end of the world, type recession and you're trading at a forward P of like 20-ish, it's really low because then everybody's looking and they're saying like PayPal's like obviously going to have much better days than what they're having today, right? So from that standpoint, I look out there and I say that's an extremely low probability you could fall to $30 even if the market got hit really, really hard, okay? Now, the way I look at PayPal stock, and then we'll kind of talk about what my plans are here. Am I buying long-term call options and things like that? PayPal stock, in my opinion, is in a bottoming out phase right now. A bottoming out phase is essentially a phase a stock goes through where, it's basically already churned through most of the old shareholder base, and most of those folks sold out, and it's gathering a new shareholder base. And if you kind of take a peek at PayPal stock over the last year or so, it's basically what it's doing. It's just finishing out the churning of these old investors and gathering new folks like myself, right? I was never a PayPal shareholder. Now I am a PayPal shareholder, right? And I want to become a very, very large PayPal shareholder. So it's moving out from the folks that used to own PayPal stock here, and it's selling these shares off to people like myself, right? And so we have that situation going on in the stock at the given moment, right? And so this is a bottoming out phase that's going on in my personal opinion. And these phases can last anywhere from 1 to 3 years, depending upon how long we're really talking here, right? Now, in regards to myself, my plans are to continue to add shares pretty much on a week in and week out basis, as long as the stock is anywhere under $100 a share. Anything under $100 a share, I am a buyer of. And so don't be surprised if eventually this position's $200,000, $250,000, something like that, okay? Now, the next thing I'm also looking at, especially if the stock is under 60, is I actually am considering some like long-term call options, some things that expire in 2026, January 2026. I bought a few so far, not very much. Because the way I like to think about this, okay? Let's say I was going to put $100,000 into PayPal stock, right? What I could end up doing is instead of just buying $100,000 worth of the shares, I can go ahead and I can buy, let's say, $90,000 worth of shares over the next 6 months, and then I can buy $10,000 worth of long-term call options, right, that expire in 2026. This is something I regret not doing with Meta. Meta, I was just buying shares. I should have bought some leaps, because those leaps would have been up, depending upon strike price, probably between 3 times and 7 times their money right now, okay? So I should have been allocating 10% or so of my money, especially in Q4 of last year. That was ridiculous. And so I'm not going to make that mistake twice. And so likely I'll be a buyer of at least some sort of leaps. You just got to watch yourself in terms of your risk levels in regards to these long-term call options. Because what if PayPal stock is stagnant for the next several years, right? And your leaps all expire worthless. That's where you get into some trickiness, and that's why I can only allocate a certain smaller portion over to the leaps versus like just buying the stock straight up. Okay, so yeah, that's my opinion in regards to PayPal to $30 and that whole subject. Okay, appreciate everybody joining me as always. Thanks so much for being subscribed, folks. I got pinned comment down there, my free workshop for you. I got one if you make less than $100,000 a year, one if you make more than $100,000 a year, investing in 2023 and beyond, exactly how I'm approaching this market. And that should give you a lot of tips and kind of pointers and things like that. Okay, appreciate y'all. Much love as always, and have a great day.